Andrew Holland, good afternoon. We may be off by 250 points from the recent high, but up about 1500 points from the recent low. Do you think the gains what we've registered in summer of 2023 are durable in nature?
Yeah, I think they probably are, Nikunj. I think the only thing that would upset the apple cart at the moment would be, further kind of unintended consequences of the Fed rate hikes, and obviously the credit crunch you're seeing now in the banking system in the US. And the reason I point this out is obviously, whilst the Fed has kind of managed to kind of help on the banking sector, if this spreads through to the kind of commercial real estate or mortgage market in the US, then that's a whole bigger game to kind of get worried about. So I'm just slightly nervous in the short term whether some of these problems might just kind of be swept from under the carpet. So it's something to keep an eye on. The market itself is obviously kind of not thinking that the debt ceiling is going to be a problem. It would have played out, I'm sure, in the bond markets or currency markets. So everyone's pretty kind of relaxed about that. So it's really, anything else which would be a negative are not thought of in terms of the unintended consequences, which would have obviously a risk-off trade. But by and large, as you know, when we've been speaking, we've become more constructive on our markets. We think interest rates are going to fall in the US very sharply by the end of the year, but more significantly because of the slowdown, which will help lower commodity prices, including oil. We think Asia has the ability to reduce rates a lot quicker, or a lot earlier, should I say. And the RBI should be able to do that in October of this year. So, that's probably why we're seeing, more monies come towards emerging markets, more monies come towards India. And the bond yields here, a 10-year bond yield here, well under 7%. So you're already baking in 25 basis points for October anyway. And I think that's what the markets responded to.
For equity markets, the US equity markets expecting that interest rates will come down before the year ends, then why is the 10-year paper jumping back again? It's at 3.45, 3.5. The bond market is saying that rates will go higher. The Fed officials are saying that there is no big case for a rate cut, but equity markets are telling us a different story.
I think the bond yields are telling you a different story, Nikunj, because the Fed rate is at 5%, right? So, but your 2-year and 10-year is way below that. So to my point of view, I think the only reason it's being elevated right now is because of the debt ceiling problems, and obviously the government or the Federal Reserve will have to go out and just build up their balance sheet a bit in terms of issuance. But thereafter, you're seeing a very, very, very much a slowing economy, not just in the US, but elsewhere as well. So I think we're going to see interest rates coming down sharply. So I think the market's got it right. I think the Fed's got it wrong.
All right, now where do we have? We have a bit of a reversal in Tata Motors. We've got a bit of a reversal in banks. We've got a bit of a reversal in real estate, and HUL, Marico, that good old FMCG space seems to be reversing. Naresh, has the tide finally turned for metals? Because in this rally also metals did not participate the whole hog.
So the metals have been a tough place, and now the momentum is shifting a little lower for even the best names. So Jindal Steel, which was getting closer to that breakout of 600, 610, tried to get closer to it and has corrected back. We are back to the lower end of the range. 530 is the low for the last 6 months. So if 530 breaks, even the best of the name in the metal pack actually be giving way. Same is the case with Vedanta, which tried to make a small breakout move 2 days back, has not been able to do so. Something like Hindalco has been in a downtrend. Nalco sale have not even picked up as such. But even the best of the names are actually not able to hold on to the supports. So been avoiding the sector, but would be difficult to short them given that some of the names have already corrected. So not looking at a short here, but definitely not looking at a buy as of now.
Like Jubilant Foodworks' performance, their margins, of course, were impacted, and clearly there were inflationary pressures in key raw materials, hyperinflation in the prices of cheese, vegetables, higher freight costs. All of that impacted them in the fourth quarter. Having said that, operationally, the PAT has fallen short of expectations, but the PAT and margins are actually in line with what the market was anticipating, which is why I guess you're seeing a positive reaction come by for Jubilant Foodworks as we speak right now. And it's quite interesting, right, Andrew, because you have a peer within the same industry, Devyani, Sapphire Foods. They've all fallen short of market expectations, and clearly the leader within the listed space at least, Jubilant, has managed to ride the tide.
Yeah, it has, but it's obviously not been some of these stocks have not been great performers, and maybe there's a case of that. The bad news is in the price now, or has been in the price, and therefore you're seeing a recovery. But within this whole sector, I mean, I don't mind the fast food sector at all, but I think within the whole FMCG kind of basket, I still think beverages is a place to be. I'm not just talking about alcohol, I'm talking about soft beverages as well. So I think that's where the big growth is coming from, and I think it's just being not really kind of recognized by the market yet. But I think we'll start to see as people keep moving up the kind of value chain in terms of premiumization, you'll see, better margins, better growth, for this subsector of FMCG. So I think beverages is still where I'd be placing my bets at the moment.
I also wanted your take regarding manufacturing and electronic manufacturing particularly, but before that, let's listen into the bite coming in from the management of Kaynes Technology. That stock is on fire today, 15% higher. The management is maintaining the guidance of around 1,700 crore top line in FY24, but overall PLI schemes, etc. has helped them quite a bit. Listen in to what they had to tell us about the company's growth outlook.
Next 4 to 5 years, it is all manufacturing in India. So if we can gear up ourselves, we are there. This physical, we will do around 25 crores of benefit, but the real benefit will come in the next year because our products are just getting finalized with our customers and we are in the last leg. So maybe from the next quarter onwards, small billing will happen, and going forward, it will increase in the last 2 quarters.
Essentially, our order book is quite balanced. It's not changed much from in terms of competition from what it was 1 quarter ago. But in terms of new RFQs, we see that new RFQs are in all the areas. They are in EV area, they are in industrial area, they are in IT area, they are in medical area, and also railways. So I would expect that both PAT and the EBITDA margins will be higher than whatever we have posted so far.
Sure. Andrew, this is one space which has been doing quite well. The order books have been swelling. There is this entire PLI scheme, Philip as well. Any favorites that you have in this space, whether, Amber, Dixon, Sirma SGS, Kaynes Technology, etc.?
I think they're all going to do well. I think, electronics has been one of our themes. And whilst, the company talked about the kind of domestic market, I think this is just going to be a huge overseas exporting opportunity as well. So this is a great place to be. And I think we'll see more and more companies move into this area over the next few years as well, because the opportunity is just so huge. So, I think a basket of these is the place to be, because that they're all going to do extremely well, both domestically and I think increasingly through exports as well. So a huge sector in the making.
Okay, so that's the take coming in as far as the entire manufacturing theme is considered as well. But for now, slipping into a very short break with the news that the market continues to reel under pressure. It's the banking space which is seeing quite a bit of a drawdown, 350 points lower for the Nifty Bank.
In conversation with our technical experts and Andrew Holland. Now, what is looking strong? Indian hotels. Andrew, everybody knows that hotel prices have gone higher. Everybody knows that it's difficult to get a good, weekend room in a good luxury property at a reasonable price. if everybody knows, then why is the stock going higher? I mean, shouldn't that be in the consensus?
I mean, I presume that everyone's thinking that the growth is going to continue, and that obviously, if you're getting more traffic through your hotels, you're going to be spending more money, and you make a lot of money on food and beverage. So if they continue to see that kind of occupancy rates, not just the kind of the room rate, but people spending money is clearly what the market's banking on. And this is before really we see a lot of I would say kind of foreign tourists coming in as well. So there's still that part of the game to play as well for the kind of revenues of the hotel companies. So I think the other things that the hotel company's doing is trying to move up again up the for a lot of the hotels is move up in terms of the premiumization of what they're doing and how they're kind of bringing guests and treating guests and in terms of packages and so forth. So I think there's a lot changing in Indian hotels, which is under the kind of radar, unless you really go and visit there and see what they're doing. But I've been traveling around quite a bit and staying in their hotels, and apart from impeccable service you always get, there's the restaurants are full, the bars are full, and people are spending money. So it's not just the hotel guests, it's outside as well. So that's where they're earning their extra revenues, and I think that's likely to continue, given the consumption trends that we're seeing, and it's not likely to kind of fade away in the very short term. So I think the re-rating for the whole sector will continue.
Andrew, I'm going to split my next question in two parts: overrated and underrated. Give me a name category or a sector which is overrated, and vice versa, a name category or a business which is underrated.
That's to me, right?
That's right.
I can't really kind of do stocks, but I would say that overrated probably, even though it's taken a little bit of a hit recently, I still think commodities are overrated. I think everyone's still expecting to be up, pull up, and it could well be in the very short term. But if we're heading towards a downturn, then it's that they're still overrated in terms of where the prices are going to be going forward. In terms of underrated, I would still say that the whole of that beverage industry is just I think been overlooked by the market, and I think we'll start to see that trend, in terms of re-rating of the sector will happen over the next 1 year. And as I mentioned previously, the electronics industry is very difficult to play. There's a very limited number of big players there. But I think that whole manufacturing story for electronics is going to be huge.
Okay, in the meantime, let's take stock of some of the other big movers as well. Credit Access Grameen is higher by around 9%, sitting at all-time high levels. And then on the other hand, you have names like PVR, which is sitting at 52-week lows and has been trending down for quite a few days. Kunal, your take, PVR, would you be a buyer after the correction, and Credit Access Grameen?
Not really for both of these stocks. PVR Inox, the stock has been selling consistently, so it's more of a sell on rise, sell on weakness for the stock, making a pattern of consistent lower highs and lower lows. I think from the recent correction actually started off for PVR Inox from 1800 odd levels, and the stock is almost now at sub 1400, which means even at a point when the markets were doing exceptionally well, the stock continued to get to a selling pressure. Indicators are not yet oversold, so I'll probably wait out for some more time to try and go for a contra trade on PVR. Maybe if the stock corrects another 100 rupees, 1250 odd levels, that would be a good entry point from a contra perspective. For Credit Access Grameen, I think that stock has shown signs of overbought nature on indicators. So today's gap movement, the spike in volumes the stock has shown today indicates that maybe it could get into a cool-off mode over the next couple of days. So again, a buy on dips over here for Credit Access closer to that 1100 mark.
Okay, those are some of the buzzing stocks. And Andrew, that's been the other thing, right, as to how the exhibitors, or which is only one entity now, PVR Inox, has fallen prey to the drying up of content, or good content, which has hit theatres in the quarter gone by.
Yeah, I must admit I don't really kind of follow this company. As you said, it's only one company, so it's not high my radar. And neither do I go to the movies that often. So I'm probably the wrong person to ask on this one.
Yeah, well, the only one within the listed universe, or actually the only one in the entire industry, barring the few small odd regional players that you may have.
Yeah, that's right.
Only
I think,
dominant one.
yeah, after the merger, it's the only play which is there as far as the exhibitors are concerned. But Naresh, your take on Hero MotoCorp, despite the weakness in the market, that stock has managed to rally, what, 5 to 6% this week itself. And on the other hand, you have Kotak Mahindra Bank, which has been on the back foot for a bit now.
So Hero MotoCorp is interesting. If we look at a little longer term picture, in the near term, yes, it is back to that 2700, 2750 mark. If we look at the last 1 year, the stock made a top around 2800 to 2870, at least 6 times over the last 1 year. And that has been a major resistance for the stock. The last time also it was promising almost just 6 to 8 months back, was hoping for a breakout, then it corrected and went all the way lower. Now we are again coming back to the stock at those levels. The stock pre-COVID also used to be at 2800 was the top, and the stock was available at 2800 back in 2014 as well. So it's almost been 8 to 10 years of hardly any returns for the stock. If this can change tracks and become a breakout about 2800, that would imply a long-term trend change for the stock. So Hero MotoCorp is very interesting to keep watching out for. It's become a buy on the short-term charts, a buy on dips going forward. If it can sustain about 2800, this would be an interesting stock for the medium to long term.
27-24. Aisha versus Hero MotoCorp. You compare Hero MotoCorp with TVS, it's a tale of two cities. One's gone down, other's gone up. Aisha, in fact, by the way, post numbers is really making a comeback. I mean, it is what we've seen in the SUV market last year has been a trend in the two-wheeler market in last couple of years, that Indians are migrating straight away to a premium motorcycle. It's no longer that you are migrating from cycle to 110cc, 110cc to 350cc, then a small car, and then hopefully a luxury car. But Kunal, that's a natural migration, right? No cycle, no scooter, straight away SUV. Urban. No, that is true. That's 40% market share, 40 to 50. I think that number keeps on changing on a monthly basis. Is the number of SUVs? You know, I was standing at a mall 10 days ago waiting for my car to come, which is a SUV, But the amount of cars which crossed when you're waiting for your car, it's 7 on 10 cars are SUV. Yeah. And out of that, 2 were luxury. So you pretty much know
including
that which
yours.
Mine is not luxury. I mean, luxury is 50 lakh plus. No, 50 lakh plus is luxury in SUV.
Almost there.
Yeah, so I still have a distance. Aspirations, why not? Aspirations and affordability. Aapke muh mein ghee shakkar. That's what I would say.
No, that's not what I was saying. What I was saying was how much a car costs is almost close to 50 lakhs.
No.
But anyway.
32 lakhs. Still a distance away.
Nonetheless, we'll discuss all of that offline. But for the online chat, let's focus on what's happening with the market. Tomorrow, we'll get numbers from SBI as well as ITC. And interestingly, FMCG index has been your top performer in the year gone by. The likes of right from Britannia to HUL to ITC, all of these stocks have managed to perform quite well. Naresh, your take from the FMCG pack. What's the top bet?
So in this, the top bet would be Godrej Consumer. That's a stock which has shown a lot of leadership. Even after that Raymond deal, the stock corrected, retested 900, and slowly and steadily has made again a new 52-week high. Clear indication of strength out here. ITC was a favorite, but now the risk rewards are not great at current prices. So the stock has done really well over the last 1 year. So that's the only reason ITC becomes an avoid. Otherwise, the trend is still strong for ITC. So Godrej Consumer looks the most promising. Next, I would be watching out for Hindustan Unilever, which has gone nowhere for the last almost ever since that peak in April of 2020, when it made a top at 2500. We are still at 2600 odd levels for quite some time. So on a dip going forward, the short-term breakout did take place about 2600 levels. So again, if it comes back to 2600, it would be a buy on dips. As of now, at current prices, Godrej Consumer seems to be the best bet.
Whether it is Amber or Dixon or whether it is Keynes Technology, that space is just really, bubbling with solid price action and volume action. Real estate. Now, Andrew, conventional wisdom is that real estate, which stroke hard assets, they do well when inflation goes higher. Investors, you want to protect your purchasing power by simply buying into hard assets. This time, real estate stocks and real estate prices are going higher when inflation is coming down.
Yeah, and listen, if interest rates are coming down as well, this is another great kind of opportunity for the real estate companies to continue this kind of trend. Usually it's kind of that, they kind of overbuild and then there's a slowdown. I don't think I'm going to see that this time. I really don't. I think as our economy starts to pick up in the second half of this year, I'm talking about October onwards, and interest rates come down, I think you're going to continue to see, very, very strong demand for housing. And don't forget, we could have overlooked that kind of whole affordable housing that's been taking place across the country, and then people with aspirations start to move ahead. You talked about it in two-wheelers and cars, and I'm talking about it now in real estate. I'm also talking about it in beverages. This is the trend that's going to continue, going ahead. And I think we're just overlooking some of these kind of themes which are playing. And you're going to get continuous re-ratings of this sector. There might be days like today when you see a bit of downturn, but I really do feel that this asset class, I think real estate will be good as interest rates come down as well.
V-Mart and D-Mart, well, they have one thing in common. Well, they have come out with poor set of numbers. In fact, V-Mart, I think for the quarter gone by had an operating loss, if my memory serves me right. D-Mart, again, numbers have collapsed. Andrew, would you be looking at buying into some of these so-called classic value retailers, V-Mart and D-Mart? They may be going through a cyclical patch of downturn, but in India, value retailing or Sasta Sundar Tekao concept will never die.
Yeah, no, it's not. I mean, retailing, I think, it's going through its own kind of challenges. There's some big players coming in, and there's, obviously competition is quite fierce. I'd rather play it differently. I'd rather play it through, who supplies the stores rather than actually, who's the retailer, because I think that's where you're going to make the money, which is. So I'm not so keen on retailing at the moment. I know there's a big move and a big trend for this to continue to do well, and I think some of them will. But as an overall sector, I just feel that the competition is getting more fierce, whether it's online or some of the bigger companies coming into these sectors. Just worries me. It doesn't make me feel comfortable at this moment.
Andrew, great to have you on the show today. Glad that you could take time out. Let's take some closing strategies on that note, as we're pretty much around the session lows. Kunal, what's looking good to trade?
So Glenmark Pharma is something which I would look to book profits on from the closing segment. I think that's a stock which has done exceptionally well. The last 2-3 days, the stock has taken a bit of a pause. So I think booking profits on Glenmark Pharma.
Naresh, what about you? What's the closing trade you are spotting? The question is for you.
Holding on to the same one, Coal India is the one which I continue to add. The stock is holding all above that 240 mark, short-term breakout done. Even in today's correction, did not see a fall. That's an indication of relative strength. So expected to do a follow-up move over the next couple of sessions.
Okay, on that note, we'll slip into a very short break that with the news that there's been a bit of a recovery in the market, at least above the 18,150 mark, but still very much in the red.